Rich Canleone coming to you from CME Holdings trading floor. Segment is earnings focus, earnings threshold. The reason why it is about the earnings focus and the earnings threshold is because what we've seen in the last couple of days is obviously a couple of the economic releases that we've seen. The market's focus, even though they've been negative, the market's focus isn't really that it's moving downward. The rally is still intact, which suggests that the focus of the market, even in light of the bad reports, as an example, the FOMC meeting, the minutes the other day, in fact, raised a little bit of a specter of inflation. Market took it on the chin and came back towards the end of the day. And if you recall, in fact, the mortgage apps this morning down 2%, and the market actually put in a new double top high in the 1336.37 level, which is in fact the June contract. The mini S&P and the big S&P June contract high is 1337. So having said all that, what it suggests is that even in light of some of the economic releases that have been kind of putting the market on the fence, the market is working its way higher. The earnings focus obviously doesn't really get started until we see Alcoa, which is historically the start of the earnings season. That isn't until I believe that isn't until the 7th. Nonetheless, Monsanto's came out today, unofficial. You could look at it as the unofficial start, but Alcoa is really the start. Monsanto's came out today. It was expected 184, came out 187. So I think that's what the market is hanging on, is in fact that the earnings survey, the results themselves are beating that. So until we get the full feel of what those are going to be, I think the market is going to stay right here. What you're looking at again in terms of the technical side, the 8-day moving average actually comes in, and I'm looking at the cash at this point. Don't forget, for value is negative 496. The cash at this point, the 8-day moving average, which seems to really hold on well, 1327 even. The 50-day is 1311, and the 100-day is 1276. In the last 35 to 40 days, all those levels have actually come into focus. The market has revalued them, traded them, and bounced off of them. And I would look at those levels favorably and still buy this market. Rich Canleone signing off from the CME Trading Group floor.